Hey traders, Nick Shaheen here looking at Chipotle. Pretty violent stock. By that I mean it moves a lot. It's a high ticket item, but it's also expensive. That's not always the case, but in this case it is. It sells at, I don't know, 100 PE maybe. For reference, Amazon is in the 70s. Okay, 95 PE, which is pretty crazy for a restaurant. 4.5 times sales, 4.6 times sales, not too crazy, but it's pretty expensive from a price to earnings perspective. So, just to recap from the olden days before they had the bad burrito headlines and they fell from grace, they were 700 and something dollars. The one reason why everybody was chasing the price of the stock was the fact that they turned comps, very strong comps, comparable sales, so year over year growth in the sales, which is the idea of you don't mind overpaying for a company that delivers a lot of growth. Like Amazon, when it was expensive PE, they didn't mind because it was growing its sales. So same with this one. But then they had the sickness issues, and then they lost that comp, and they started turning negative comps. And you can't pay. That's why the stock got cut down to the 200s, 250, I think, 40, 35. And at that time, I sold puts in it because I thought that they would recover eventually, and I didn't need a rally. But now they got their comp back. But it took a long time, over a year, maybe almost 2 years. So now they're. I find it hard to short because they got their ace back. Their ace was their comp, and the last earnings report was a strong comp. So I don't want to short it, but I don't want to go long it either. But let's see if we can find some levels that make sense. Okay, so this is a 2 hour chart. Every bar is 2 hours. Somewhere around the 20th, I drew a ghost. You can see here kind of like a messy chart. This is the ghost that goes up to here. And I drew it somewhere around here, right here. And this is what I showed. I thought it was going to go up a little bit and then go down a little bit. This is the line right there with these dots. And the ghost chart, you can see the ghost pattern, lighter colors. And this is exactly what happened. And then I thought they would go up also. And here it is halfway through. So I'm going to zoom out. Actually, before I do, let's look at the levels that really matter here on this time frame, since I have it, so I don't have to come back to it. Okay, so big dip, strong bounce, another dip, double bottom, back to the place where they fell. So now I have a range. Within that, I have a mini inside range, which is this one. So why am I picking these levels? This is what just sticks out to me. This was an important line here. Arguably this would be the same. Arguably this was the pivot around it. And this is where we're at. So I do have this range from 850 something to 780, and then in between it, inside of it, I have 810 as another level to look at. Depends on the time frame. If I'm a slower trader, then I look at this bounce here and this pivot right here. So this area is important to me if I'm not that active. There are plenty of these. So let's zoom back out to the daily chart and see if we can get a little smarter with that. Okay, so this is that ghost pattern I told you about. So if patterns are repeating themselves, how did I come up with it? I just copied prior moves and just moved them forward. Okay, so if this plays out according to my plan, there's going to be another whoosh lower soon enough. As soon as it retests this top, it should come back down based on what happened before. But then that's not the end of it, because there's also going to be another rally and another. So it's choppy, but inside the zone we just highlighted. So what other areas we can look at? So if I'm a longer term trader, I know I have friends that were short this. There are levels to look at. So usually when a stock breaks out, I look for consolidation areas, somewhere where it can find footing so it can use for higher highs. I don't like it when stocks do this, like Roku or Shopify or what was it? Something else. Oh, silver, gold. They tend to get shellacked pretty hard. So in this case, there is a consolidation. Here's a level that sticks out, 725, almost exactly. So it was resistance, Every time they tried to poke, they came back to it, they fought on it, and then broke above it, tested it for support. So now the R turns into S, and they took off. They did kind of a similar thing, only shorter time frame, so not as good a consolidation. This is not good enough either, but it's better than this. And again, they broke out support. They proved they can use it twice, 3 times, you can argue. So now that's how you can echelon up. It's better than to go straight up. It's better to go up, sideways, up, sideways, up. So you can consolidate, so you have not so many weak hands. When this happens, then everybody that got profits here, at the first sign of trouble, they're going to be out. So they call them weak hands. Whereas these are stronger hands, because they may or may not be the ones from here. The ones from here may have sold over to other hands here, so they'd be less likely to get out. They just got in. So this is a little consolidation. Also, if you consider that this is one push, the second push, and the third push, it's kind of played out. So it makes sense that it may dip. Now, if you love the stock, don't come at me. I have nothing against it except the fact that it's too expensive and it's not for me to buy. But I'm not saying short it, but I do have friends who are shorted, and this may help them in their opinion. What other levels stick out? So now we picked a few levels on different time frames. Depends on how fast of a trader I am. This is not enough. As far as if I'm a really slow trader and in it for the long haul, here's a weekly chart to remind us where it came from. So the weekly chart shows that it plays well to technicals. Here was a head and shoulders that played out almost perfectly. Here's a head and shoulders that also played out perfectly, kind of down to here. Here's a breakdown of this line on a lower time frame. These lines would make sense. This one that kind of played out, but not all the way. So I can tell you that definitely the buyers are in control, but for me, it's one of those TH. It's too high to chase and too hot to short for me personally. So I would wait for an entry. But if you twist my arm, I'd rather short it mildly, how with put spreads maybe, or put spreads, but not necessarily verticals, maybe calendar put spreads or diagonals, where I buy a put out in time and then sell something against it to hedge my bet. So I don't have conviction in either positions. Okay, so you can argue also that this was an inverse head and shoulders where the upside potential was somewhere around here. It definitely overshot. So what if I can declutter even more and go to, let me take out all the lines and see if we can come up with the same line. So this is a monthly chart. Every candle is 1 month. This was before the bad burrito, and then fell apart. I think they had a base, and then they had another incident with the bad food. I can't remember which pokes, and then it fell apart, and then the market fell apart, and then it bottomed in 18. Actually, it probably had a different price pattern than the general market. But anyway, off of the bottom in February of 18, it had an insane rally. So lucky you if you caught it, 230%. But for me, it's too high to chase it up here. So speaking of necklines, right? Earlier I said you like to go above it and then use it as support, so you can use it as a base for further upside. What's wrong with coming back to here, which was a very pivotal moment, correct? Because here's 1 push, 2 and 3, and then some, and then 1 push, 2 and 3. It fell short of this. It should have been longer. So this support held, and here they are trying to get to the moon right away. And what's wrong with coming back down to this area? If you're a bull, you almost want that. You never want lose money, but you're almost okay with it. How about that? So you can prove to the sellers that this indeed will be support. Like here, it was major resistance, a major failed point. And what about making it support? So you can come down to it, bounce off of it maybe twice, and then show that you can come back up. And once you get to that one, you fail the first time, but then after that you go up and boom, break out in some sort of a pattern or so, maybe on earnings or something. So it's not the end of the world if it falls back down to 720-ish, which, by the way, if I remember correctly, that was one of the pivot points that we looked at a lower time frame. Was it a day? Anyway, I can't remember, but there was one of the pivot points, maybe on the weekly. So one thing you don't want to see on a daily basis is losing this level here for the faster traders, because it was some sort of a pivot point where the reins changed hands. They broke out, they defended it, and if they defend it again, you don't want to see them lose it, because that looks like like a head and shoulders. You know, one shoulder, one head, lopsided shoulder. Well, the attack on one neckline, and if you lose it, they'll come back to this point. Is this point important? Yes. This is not only important because of that consolidation zone we just spoke about, but it's also the point of control for this zone. This is from June on. Whoops, never mind. I moved the chart. Dagnabbit. So, oh, okay. So never mind. It was a point of control. Yeah, right there, somewhere around there, from May on. The point of control. What does that mean? So if you consider all the volume that happened on this chart that you're looking at, this right here is the range where most of the volumes happen. So this is the value area. This is where buyers and sellers fought it out the hardest, and in particular this area right there. So 740, let's call it, is the place where a lot of buying and selling happened. What does that mean? It means that even if they lose this neckline, this should be support, because whoever fought over it, they're going to fight over it again. So this battle was fierce, and these guys will come back, or girls will come back and fight it out again. So if I were to sell puts in it short term, or put spreads, this would be something I can hide below and sell risk down here. Anybody that wants to buy a lottery ticket down here, say I want to short, if somebody said I want to short Chipotle, and they buy a $700 put, I'd say you're probably going to lose your money because of this. It's going to fall. If it falls, it's going to hit this and go support, short of a new headline. All right, so this is my look at Chipotle. I don't have a trade in it, so it's an unbiased look, and well, slightly unbiased. I don't like it because it's so expensive, and I particularly don't like the food. So I don't think it's anything special from the times I visited, and the lines aren't that long. I don't know what they're talking about, but hey, they deliver the comps, so who am I to argue with that? So there are tons of different lines to look at, depends on the time frame of the investor. So I guess the best thing to say is